All right, let's talk about something real. You ever invest in a private company, you're so excited, only to realize your money is just stuck, locked away for years, maybe forever? Well, today we're diving into this huge problem in private investing. They call it the 10-year trap. And more importantly, we're going to look at a powerful, regulated solution that is completely changing the game. Let's get into it. You know, this quote right here, it just hits you, doesn't it? It gets right to the core of the issue. I mean, at the end of the day, the whole point of investing is to hopefully get a return, right? And to get that return, you need an exit. You need a way to sell. If you don't have that, well, you've pretty much just donated your money. So let's officially define this thing, the 10-year trap. It's the harsh reality for literally millions of investors. You see a startup you believe in, you put your money in, but it's not like buying Apple stock. You can't just log on and sell your shares tomorrow. You're basically stuck in limbo, waiting and waiting, often for more than a decade, for something like an IPO that, let's be honest, might never actually happen. And look, this isn't some tiny little problem for a few unlucky people. No way. We are talking about a massive system-wide issue. When you actually look at the numbers, the scale of this trap is, well, it's kind of mind-blowing. Okay, check out this timeline. For a startup that is successful, the average time to an exit is somewhere between 10 and 15 years. Just stop and think about your own life. How much changes in a decade? It's an absolutely crazy amount of time to have your hard-earned money completely tied up and out of reach. And the amount of money caught in this trap, it's just enormous. Since 2016, when the rules changed and allowed more of us to invest in these startups, regular investors have put in over $2.8 billion. That's billions with a B in personal capital just frozen in place. So what does that mean in human terms? It means we're talking about 2.2 million people whose investments are currently stuck. These aren't all millionaire venture capitalists. These are everyday folks who took a chance on a founder's dream and are now just waiting and waiting. And this really drives home the human cost, right? Because life keeps happening. You might get a surprise medical bill, need a down payment for a house, or have to pay for your kids' college tuition. These are real, urgent needs. You can't exactly tell a university, hey, just wait 10 years and see if this startup goes public. It doesn't work that way. So this really is the multi-billion-dollar question, isn't it? After seeing how big the problem is and the real pain it causes, you might think it's hopeless. But what if there was a way out? A legitimate, approved, and fully operational escape hatch from the trap? Well, there is. The solution is called an alternative trading system, or an ATS. And I want you to focus on that first word, regulated. This is so important. This isn't some sketchy back alley deal. It's a real, legitimate marketplace built with government oversight from the ground up. And when I say legit, I mean it. To run an ATS, you have to be registered with the SEC. That's the Securities and Exchange Commission. And you need approval from FINRA, the Financial Industry Regulatory Authority. Getting these stamps of approval means you're a trustworthy platform, and this one has been up and running since late 2022. Now here's the kicker. Getting those approvals is incredibly hard. I mean, it takes a ton of money, time, and deep expertise in compliance and technology to prove you can run a fair market. That's why there are only about a dozen firms in the entire country that have these specific ATS approvals for private market trading, just 12. That scarcity is a huge deal. In the business world, they call this a competitive moat. It's a massive barrier that keeps competitors out. So while you might hear a lot of people talking about creating a marketplace for private shares, the very few companies that have actually done the hard work and gotten these licenses, they have a massive protected advantage. Okay, so how does this regulated market actually work under the hood? It's not just a single piece of software. It's a whole integrated system of tech and services, what some call a CapTech stack, where every single piece has a crucial job to do. It all comes down to three main pillars that have to work together perfectly. First, you've got the broker-dealer. That's the licensed entity that actually runs the ATS. Second, the transfer agent. Think of them as the official, neutral bookkeeper who keeps track of who owns what, the absolute source of truth. And third is the ATS marketplace itself. That's the technology, the platform where buyers and sellers are matched up under strict regulatory rules. So, simply put, the ATS is the matchmaker, and the transfer agent is like the escrow agent, making sure the shares are transferred securely and officially. But this is bigger than just solving today's problem. This kind of infrastructure is set up perfectly for a huge shift that's already starting to happen in the financial world. The very idea of what an asset is changing. I mean, just look at these numbers. Asset tokenization, which is basically turning things like real estate or art into secure digital tokens, is about to explode. We're talking about going from a market of about $300 billion in 2022 to a projected $16 trillion by 2030. That's not a small jump. It's a monumental shift in how we think about ownership and value. And that right there is the key takeaway. As more and more of our world becomes tokenized, private company stock, real estate, you name it, where is it all going to be traded? People are going to demand safe, secure, and above all else, regulated places to trade them. The alternative trading system isn't just a solution. It's becoming the essential plumbing for the future of finance. So, I want to leave you with this question. Just imagine a world where that 10-year trap just doesn't exist anymore, where investing in a brilliant new idea doesn't mean your money disappears for a decade. If every single investor had a clear, regulated, and reliable way to get their money out when they needed to, how would that unleash innovation? How would that change everything? It's a pretty powerful thought.